Assalamualaikum warahmatullahi wabarakatuh. We are Group 4 from JBA2791B. We want to present about analysis of corporate financial performance, a trend and comparative study of Bermaz Auto Berhad and MBM Resources Berhad.
First of all, financial ratios are tools used to evaluate a company's financial performance by comparing different figures from its financial statement. This ratio helps managers, creditors, and investors to understand how well a business is operating. Through financial ratio, users can identify the company's strengths, weaknesses, and financial trends. Based on this analysis, companies can also assess their future performance and make better financial decisions.
Firstly, I would like to give a brief background of the main company, Bermaz Auto Berhad. Bermaz Auto Berhad was established on 11 May 2010 and is a leading automotive company in Malaysia, involved in vehicle distribution, retail and after-sales services, international marketing and operation, as well as CKD assembly through its associate companies. Its main operations include importing and distributing Mazda, Kia and Xpeng vehicle in Malaysia, supported by an official dealer network. Bermaz Auto Berhad also provide after-sales services such as maintenance, repair, warranty and spare parts.
So, we go to the competitor company which is MBM Resources Berhad. MBMR is a leading automotive group in Malaysia, established in 1980. It began as a distributor of Daihatsu vehicles and has grown into a complete automotive group with over 40 years of experience. MBMR is involved in motor trading and vehicle distribution for well-known brands such as Daihatsu, Hino, Produa, Volvo and Volkswagen. The group also manufactures automotive components including wheels, safety systems and NVH products. In addition, MBMR provides automotive-related service and manage investments and assets to support its business ecosystem. MBMR's vision is to be a complete automotive group and its mission is to be the automotive partner of choice for employees, customers and investors. Next, I will explain the trend analysis of Bermaz Auto Berhad. Firstly, the profit margin ratio shows an overall increasing trend from 2020 to 2024. Bermaz profit margin ratio increased from around 5.9% in 2020 to 9.5% in 2024, showing improved cost control and stronger profitability. Secondly, return on assets, which is ROA, has improved significantly over the years, rising from 8.07% in 2020 to 90.73% in 2024. This shows that Bermaz Auto Berhad is using its assets more efficiently to generate profits. Thirdly, return on equity, which is ROE, also increased strongly from 90.97% in 2020 to 41.04% in 2024. This indicates that the company is generating high returns for its shareholders through effective use of equity.
Moving on to trend analysis of Bermaz Auto Berhad, the first ratio is receivable turnover. Bermaz Auto Berhad records a high receivable turnover ratio of more than 20 times per year. This indicates that the company is able to collect its receivables quickly and efficiently, reflecting strong credit control and collection practices. Next is the average collection period. Bermaz average collection periods remains in a lower and a stable range between 20 to 26 days. This shows that the company conducts proper credit assessment before offering credit to customers, resulting in timely collection of payments. And moving on to inventory turnover. Bermaz inventory turnover increased significantly from 2.6 times in 2020 to 10.72 times in 2022. This trend indicates that the inventory was sold and replaced more quickly in recent years, suggesting improved inventory management and strong demand for its products. The next ratio is fixed asset turnover. Bermaz records a fixed asset turnover ratio of more than 2.5 times. This shows that the company uses its fixed asset efficiently and is supported by strong sale volume. Lastly, total assets turnover. Bermaz total asset turnover ratio is above 1.5 times, indicating that the company efficiently utilizes its total assets, mainly for inventory management and sales generation.
Moving on to trend analysis. First, let's look at the current ratio. The current ratio increased from 1.55 in 2020 to 2.26 in 2022, showing an improved ability to settle short-term liability using current assets. Although it decreased slightly in 2023, it rose again to 2.16, show that company remain in a comfortable liquidity position with sufficient current asset to cover its current debt. Next, quick ratio. Bermaz Auto Berhad have lower ratio in 2020 which less than 1. However, from 2021 to 2024, the ratio remained above 1. This shows that Bermaz Auto Berhad became more capable of meeting short-term obligations using liquid asset and maintain a healthy liquidity position. Moving on to the debt total asset ratio. The ratio remained below 30% and declined from 16.44% in 2020 to 8.28% in 2024. This indicates that Bermaz Auto Berhad is mainly financed by shareholders' equity and has lower reliance on debt. For the time interest earned ratio, the ratio decreased slightly in 2021 but increased sharply to 60.2 in 2024. This strong upward trend shows that the company is generating significantly higher earnings before interest and tax compared to its interest expenses. Lastly, the fixed charge coverage ratio have higher ratio, which is in 12.13 in 2024. This shows that the company can comfortably cover its fixed financial charge and manage its debt efficiently without burdening its operation.
Moving on to the comparative analysis between Bermaz Auto Berhad and MBM Resource Berhad for 2024. MBM Resource record a higher profit margin ratio at 15% compared to Bermaz at 9.5%, indicating better cost control per sale. However, Bermaz Auto Berhad outperformed MBM Resource in terms of return on assets with 19.73% compared to 13.61%, which is Bermaz more effective. Bermaz also record a much higher return on equity at 41.04% compared to MBM Resource 15.3%, indicating that Bermaz use its shareholders' capital more effectively to generate returns.
Next, let's moving on to the comparative analysis. First, receivables turnover. Bermaz has a higher receivables turnover ratio of 23.9 times compared to 15.3 times for MBM Resources. This shows that Bermaz is more efficient in collecting its receivables and converting credit sales into cash. Second, average collection period. Bermaz has a significantly lower average collection period of 6 days, while MBM Resources records 24 days. This indicates that Bermaz manages its receivables more efficiently and applies more effective credit policies. Third, inventory turnover. MBM Resources has a higher inventory turnover ratio of 21.76 times compared to 5.69 times for Bermaz. This suggests that MBM sells and replaces its inventory faster than Bermaz. Next, fixed asset turnover. Bermaz records a higher fixed asset turnover ratio of 81.49 times, while MBM Resources records 12.81 times. This indicates that Bermaz uses its fixed asset more efficiently to generate sales revenue. Lastly, total assets turnover. Bermaz also outperformed MBM Resources in total asset turnover, with a ratio of 2.07 times compared to 0.91 times for MBM. This shows that Bermaz more efficiently utilized all of its assets to generate sales revenue.
Then we move to comparative analysis. First, in terms of current ratio, MBM Resources Berhad recorded a higher ratio of 3.13 compared to Bermaz Auto Berhad at 2.16. This indicates that MBM has a stronger ability to cover its short-term liability using its current asset. Then, the quick ratio shows that MBM Resources Berhad is in a better position with a ratio of 2.5, while Bermaz Auto Berhad recorded a ratio of 1. This suggests that MBM is more capable of meeting its short-term obligation without relying on inventory. Next, debt to total asset. Bermaz Auto Berhad has a lower debt to total asset ratio compared to MBM resources. This shows that Bermaz rely more on equity rather than debt to finance its asset, which indicate lower financial risk. And then time interest earned. In 2024, Bermaz Auto Berhad recorded a TIE of 60.2, which is significantly higher than MBM. This indicates that MBM has a stronger ability to cover its short-term liabilities using its current asset. This means Bermaz is more capable of covering its interest expenses from operating income. Lastly, fixed charge coverage. Bermaz fixed charge coverage is 12.13, higher than MBM, 3.14. This shows that Bermaz generates sufficient income to comfortably cover fixed costs such as interest and rent.
Next, I will explain the significance of profitability ratio and the factors involved. Firstly, the profit margin ratio shows how effective a company is in controlling its costs and generating profit from sales. This ratio is important to shareholders to check profit stability and returns, and to management to monitor performance and make better business decisions. Secondly, return on asset or ROA shows how efficiently the company uses its asset to generate profit. This ratio is mainly relevant to management to assess asset efficiency and to investor to evaluate how well the company generates returns from its asset. Lastly, return on equity or ROE shows how effectively the company uses its equity to generate profits. This ratio is important to shareholders to assess returns on their investment and to creditors to evaluate the company's financial risk and its ability to meet obligations.
Moving on to significance and importance. First, receivable turnover. Receivable turnover shows how fast a company collects money from its customer. For creditors, this ratio helps assess the company's liquidity and its ability to repay short-term obligations. For management, it is used to monitor credit control and manage cash flow effectively. Next, average collection period. The average collection period shows how well the company used their equity to make profits. For creditors, it helps ensure that the company has stable and timely cash flow before granting loans. For management, it indicates how efficiently the company collects its receivables and manages credit policies. Moving on to inventory turnover. Inventory turnover shows how fast the company sells and replays its inventory. For management, this ratio helps monitor stock efficiently and avoid overstocking or understocking. For investors, it reflects how well the company manages its inventory to support sales and profitability. Next is fixed asset turnover. This ratio shows how efficiently a company uses its fixed assets, such as machinery, buildings, and equipment to generate sales. For investors, it helps evaluate operational efficiency and potential returns on investment. For creditors, it indicates whether the company generates sufficient revenue from its assets to repay debts. Lastly, total asset turnover. Total asset turnover measures how efficiently a company uses all of its assets to generate sales. For management, it is used to monitor all of its asset efficiency. For investors, it helps evaluate how effectively the company converts its assets into revenue.
Moving on to importance of financial ratio. First, liquidity ratio. We have current ratio. The current ratio measures Bermaz ability to meet short-term liability using current asset. Investors use this ratio to evaluate Bermaz financial stability, while creditors assess the company capacity to repay short-term obligation on time. Then quick ratio. The quick ratio assesses Bermaz ability to settle short-term debt using only highly liquid assets, excluding inventory. It provides a conservative view of liquidity, helping management with short-term planning and investors to assess immediate liquidity risk. Lastly, we have debt utilization ratio. First, debt to total asset. This ratio shows the proportion of Bermaz asset financed by debt, reflecting its capital structure and leverage. Management use it to control borrowing and financial risk, while investors assess the company's risk profile. Second, time interest earned. This ratio indicates whether Bermaz operating profit can cover interest expenses. Creditors use it to assess Bermaz ability to meet interest payment while investors evaluate financial stability and debt sustainability. And last, fixed charge coverage. This ratio shows whether Bermaz generates sufficient earning to cover fixed financial obligation, including interest and other fixed charge. It helps creditors and management assess financial risk and the company's ability to sustain debt and lease obligation.
Moving on to the future outlook of profitability ratio. Firstly, the profit margin ratio of Bermaz has shown continuous improvement, indicating stronger profitability and better cost management over time. With efficient operation and effective pricing strategies, the company is expected to maintain or further improve its profit margin, suggesting a positive outlook for future earnings. Secondly, return on asset has increased consistently, showing that the company is using its asset more efficiently to generate higher profits. Bermaz is expected to continue utilizing its asset effectively, which may lead to further improvement in return on asset in the future. Lastly, return on equity has also shown a consistent upward trend. This indicates strong profitability for shareholders and makes the company more attractive to investors. Going forward, Bermaz is expected to provide higher returns to equity holders.
Now, I will discuss the future outlook for asset utilization ratio. First, receivable turnover. Receivable turnover remains consistently high, demonstrating efficient credit control and quick collection of customer payments. Therefore, the company is expected to maintain strong liquidity and reliable cash flow in the future. Second, average collection period. The average collection period decreased in 2023 and 2024, indicating improved collection efficiency. However, the company needs to continue strengthening its credit policies. The collection period is expected to stabilize, supporting better cash flow management in the future. Third, inventory turnover. Inventory turnover decreased after reaching its peak in 2022, indicating slower inventory movement in recent years. To improve performance, Bermaz needs to enhance its inventory management strategies to avoid excess stock. Next, fixed asset turnover. Fixed asset turnover shows improvement, suggesting that Bermaz is generating stronger sales from its fixed asset. This ratio is expected to continue improving, supporting long-term profitability. Lastly, total asset turnover. Total asset turnover also shows improvement, indicating a positive outlook. This suggests that Bermaz continues to use its total assets effectively to generate revenue and is expected to further enhance asset efficiency in the future.
Moving on to future outlook. Firstly, current ratio. The ratio is expected to remain strong. The company consistent performance in maintaining adequate current asset and effective working capital management provide confidence that it will continue to meet short-term obligation without difficulty. Secondly, quick ratio. The decline in 2023 and 2024 require management attention. However, Bermaz is expected to improve by implementing better inventory management and optimizing liquid assets. With proactive measures to reduce inventory and enhance cash conversion, the quick ratio should stabilize in the coming period. Next, debt total asset. The ratio is projected to remain stable at its current low level. The company's conservative borrowing approach and strong equity base provides flexibility for future growth and capacity to secure additional financing when needed. Then, time interest earned. The positive improvement trend in time interest earned is expected to continue with strengthening profitability and controlled borrowing level. Bermaz will maintain adequate coverage of interest expenses and service debt obligation comfortably. Finally, fixed charge coverage. The ratio is anticipated to continue improvising. The company improvising operational efficiency and sustainable profitability growth indicate it will effectively meet all fixed financial obligations as long as management maintain cost control and profit growth.
In conclusion, Bermaz performs better in ROA and ROE, while MBM has a higher profit margin ratio. Therefore, MBM should increase revenue and control costs to further improve profitability. For asset utilization, MBM performs better than Bermaz in 2024. Hence, Bermaz should improve its liquidity by increasing current assets or reducing current liabilities. In terms of liquidity, Bermaz is more efficient. MBM should improve inventory management, receivables collection, and the use of fixed assets. Lastly, Bermaz has a higher debt ratio, indicating higher financial risk. Bermaz should reduce debt or increase equity to strengthen its financial position. For reference, the information and analysis in this presentation are based on several reliable sources. These include an e-book from Corporate Finance Institute on financial ratio, official website of Bermaz Auto Berhad, and MBM Resource Berhad.